Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everyone and welcome to another episode of AdMail. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's podcast, we are going to tackle three superb questions. One on accredited investor rules for IRAs. Second on a backdoor Roth 401k deadline for 2022. And the third about how to make private equity investments. Can you do it through Fidelity, or do you really need to use a company like IRA Financial? So really fun, packed episode. I think you guys are really going to enjoy it. So buckle up, and without further ado, let's get started. First question is from Paul A. from Bethesda, Maryland. Paul wants to know, I do not have more than $1 million in my IRA, but individually satisfy the accredited investor rules. Can I then invest my IRA in an accredited investor required investment? Thanks, Paul. Great question. So basically, Paul wants to know the following. Hey, the accredited investor rules, which basically are a set of rules that restrict only a certain category of person from investing in certain SEC regulated deals like private placements, hedge funds, private equity, venture capital type of deals. Under the accredited investor rules, the idea is you have to have a certain financial stature in order to do these investments. So you, at least from the government's perspective, you could at least handle the risk of loss, which private placement, hedge fund, private equity, venture capital, real estate funds, seemingly more riskier than buying stocks or mutual funds. So the rules are, if you make $300,000 married, file jointly above, or you have $1 million of net worth, excluding your primary residence, you could be an accredited investor and make these investments. So Paul says he is an accredited investor, but his IRA doesn't satisfy that 1 million or 300,000. And good news, Paul, it doesn't have to. As long as you individually satisfy the accredited investor rules, then your IRA automatically follows suit and satisfies it as your IRA. So as long as you do it, Paul, your IRA will be deemed accredited and could therefore make accredited investor type investment. So thank you so much, Paul, for that question. Second question is from YouTube. This individual wants to know, I want to do a backdoor Roth 401k for 2022. Can I do before October 15, 23 for the 22 taxable year? So a backdoor Roth 401k, also known as a mega backdoor, allows you to put in for 2022 the full amount of the contributions you can make. And it can be all in Roth. So instead of doing the employee deferral and the Roth, you'll be able to do everything in pre-tax. Okay, in Roth. The way it works is kind of like a backdoor Roth IRA, meaning you simply will make an after-tax 401k contribution, and then you would just convert it to Roth. And since it's after-tax money, you would not need to pay any taxes. Okay, so it's a very Roth-friendly type strategy. Obviously, that's something I would love to do. Unfortunately, if you aren't in a solo 401k, most likely you're not going to be able to do it. So the rules essentially for 2022 were the max you could do if you're under 50 is 61k, or if you're over 50 was 67.5. For 23 it's 66 and 73.5. But since we're talking about the 22 taxable year, what you can do is do dollar for dollar 61 if you're under 50 or 67.5 in Roth in your 401k. And the beauty is you don't even have to set up the plan in 22. As long as the plan is set up before you file your individual or business tax return. So if your business is a sole proprietor, single member LLC, it's April 15th with extension October 15th. If you're a C Corp, it's April 15th or October 15th. If you're an S Corp partnership, March 15th, September 15th. So you need to have the plan set up before that. technically the Roth money doesn't have to be deposited. You can have a check, but it needs to be dated before that extension date. Since we're already in October, you still have some time before October 15th if you're a sole proprietor, single member LLC, or C Corp. If you're an S Corp or a partnership, you probably filed your return already. You had to in September. So the mega backdoor of the 61 or 67.5 for 22 is no longer available, although you can still set up the plan in 23 and do a mega backdoor of 66 or 73.5 if you're over 50. So you have that ability to obviously continue for 23 and beyond. But if you still have time and have not followed your extension return, then you can set up the plan in 22 and go crazy on Roth. You can also just do profit sharing contributions, 20% of the net Schedule C for a sole proprietor or single member LLC, 25% for C or S Corp W-2, and get deductions for 22, so long as you haven't filed your extension. You do not have to do not have to have set up the plan in 22. It can be set up in 23, so long as before you filed your return and extension. Third and final question of today's podcast from Ravi T. of Montclair, New Jersey. Ravi wants to know, I want to do a private equity investment. Why do I have to use IRA Financial? Why can't I use my IRA at Fidelity? So get this question all the time. The answer keeps us in business because Fidelity, Schwab, Vanguard, Bank of America, they don't do alternative asset investments for retirement accounts. Some will do it for ultra high net worth, but for 99% of us, if you just say, wire my money in my IRA to hedge fund A or private equity fund B or real estate fund C or private placement D, they're going to 1099-R you and treat it as a distribution. Why? Because there's 50 people a year that call me and say, Adam, I just got a 1099-R from the IRS or from Vanguard or Schwab. It was sent to the IRS, copy to me. I don't understand. I invested in a private equity investment in my IRA. I sent it from my IRA at Vanguard or Schwab or Fidelity. How is it taxable? I'm like, well, they didn't treat it as an IRA investment. They basically just said, take the money. You have 60 days to figure it out. And what you should have done is just roll the money over tax-free to IRA Financial or any great company in the self-directed IRA space. And then we would make the investment because we will custody alternatives. Now, Fidelity, Schwab, Vanguard, they could custody alternative assets in an IRA. They don't want to. Why? Because they don't make money when you invest in your friend's private equity fund. If they're involved in the private equity fund, they may let you do it, whether it's a mutual fund, ETF they sponsor, or a REIT. They have no issue generally if you do that with an IRA. But if it's a third-party fund and they're not connected to it, their basic attitude is, well, why should we deal with the risk and administration? We're not making any money off it. Tough luck. What they should do, Ravi, is say, listen, we can't do this investment for you. So you need to find a company like IRA Financial, or you have 60 days. We're going to send you the money and you have 60 days to deposit it in a self-directed IRA company before you make the investment. They never tell you that. And Ravi, I'm sorry, dude. I hope you have 60 days. I hope you're still in this window because if not, it's going to be tough to fix. There are ways. So if you are in this position, let us know. We have fixed it through correspondence with the IRS. It's just very time consuming. It's possible as long as you can prove, obviously, that you didn't personally benefit. A lot of these big financial institutions will not correct 1099-Rs. They won't amend them, even though legally they can. Excuse me. How do I know? Because we do it all the time, right? If there's an error in the 1099-R and our client lets us know, we'll fix it. The big guys don't want to do it. I don't know why. It's not expensive, right? It's software does it. It's really a couple clicks of a button. I just don't think they want to get involved in that space. But it's certainly possible. But remember, if you want to do alternative assets, make sure that money is rolled over to a company like IRA Financial, and then we will affect that investment. Same tax deferral characteristics or tax-free in the Roth. We just specialize in custody and alternatives, and we will definitely not 1099-R you and treat it as a taxable distribution. So Ravi, if you're listening or watching on YouTube, please, I hope you're in that 60-day. Let us know. You can open an account real quick, and then we'll retitle in kind. You don't have to send us back the money. Well, you generally should. We'll have to figure that out because if you pull money out, you got to pull money back in 60 days. But call us, and we will try to help you. Sometimes the fund will let us send the money out and just return it. If you're not in that 60-day window, you can still call us. We may have some ideas for you. But yeah, this is all, it's not your fault. It's all on the backs of the big banks, financial institutions that literally do not care. Honestly, they just send you the money and will 1099-R you. And I spoke to a guy, a couple of weeks ago. He got $1 million plus from his IRA into a fund that he was involved in, and they 1099-R'd him. And this was a year later, so I couldn't really help him. Now he's dealing with like $300,000 of tax, more, almost $400,000 of tax because he's under 50. So 59 and a half. So it's a big problem. It's not fair. You're not alone, so hopefully you can correct it. But let us know if we can help. That's it. Another AdMail in the bag. I hope you guys enjoy the podcast. I love these podcasts. So much fun. If you're watching on YouTube, hope you enjoyed the view. Otherwise, thanks for hanging out. Thanks for listening. You can obviously get the podcast. Generally drops every Thursday or Friday, depending on how crazy busy we are. And I think you'll learn a lot. It's questions from super smart people that get to me. So find their way in my inbox. If you want to send a question, send it to info@IRA Financial. You can just leave a comment on YouTube, Facebook, Instagram, Twitter, LinkedIn. Find us, chat, call us, whatever. We'll help you. And if it's a good question, we will put it on the pod. So thanks again for hanging out. Have a great rest of your day and take care.